Seguimos pendientes de la evolución del conflicto entre Rusia y Ucrania y sobre todo de las repercusiones que puede tener esta guerra en las economías mundiales. También pendientes de todos los mensajes que nos van llegando, no solo por parte de los dirigentes de los distintos países que están mostrando su apoyo a Ucrania, sino también por parte de los bancos centrales y si podría cambiar en algo o no la hoja de ruta que tenían dibujada, sobre todo para hacer frente a una elevada inflación, una inflación que sigue elevándose mes tras mes y sobre todo ahora perjudicada por esos elevados precios energéticos que se están encareciendo todavía más en vistas a esta tensión geopolítica. En los próximos minutos vamos a hacer un repaso de la situación que tenemos en los mercados y lo vamos a hacer con Jay Pelosky de TPW Advisory. Jay, thank you so much for having us a few minutes in Negocios Televisión.
Happy to be with you again, Martha.
Jay, the conflict between Russia and Ukraine is heating up with heavy bombing from the Russians in Ukrainian cities. The Russian Foreign Minister, Sergei Lavrov, says the response to sanctions against Russia is a nuclear and devastating third world war. Which can be the impact on markets? Which scenario are they pricing in?
Well, it's very interesting you asked the question because I think, again, one of the things that's been very evident here over the last week is the speed of adjustment. And we've talked about this now for several years, right? We talked about COVID speed. We talked about climate speed. We've talked about kind of analytical speed, the power of information. And here we're talking about an absolutely, I think, unprecedented speed of response by the EU, by the U.S. and by individual countries and companies, making it very difficult for Russia to sustain its invasion, its unprovoked invasion. And so I see already as an example, companies not accepting Russian oil or gas exports. So you have Russia, I believe, under significant pressure. If they're not able to sell their gas or oil, and they're under heavy sanctions and not able to really access their reserves, I think it becomes a question of how long can Putin and his people around him stand the pressure, because the Russian economy is going to absolutely collapse. And so while we're showing pictures of Ukrainian buildings collapsing because of shelling and things of this nature, the Russian economy is going to implode. And so I believe that the strategy is for Russia to try and find an off-ramp, a solution, a negotiated solution. And I believe China is likely to play an important role here because Russia trusts China. China is clearly trying to move Russia to cease the war. And therefore, I think that's the potential. And in the interim, markets are already pricing in a cessation of Russian energy exports. And you can see that with the price of oil, the price of gas in Europe in particular. So markets are effectively already pricing in the worst case scenario -1. Of course, the ultimate worst case scenario would be some sort of nuclear conflict. But I would find that's not a base case, or a case that I would ascribe even a tiny percentage to that occurring.
Markets are also looking at the economic consequences of this war, and Jerome Powell, Fed chair, say the impact of the conflict between Russia and Ukraine in the U.S. economy is still unknown. Which could be the implications for the macro?
Well, I think he's absolutely right, because you have to consider trying to ascertain the signal from all the noise, right? We've had tremendous amounts of noise hitting the market from all sides, and identifying the signal, the real impact, is quite difficult. I actually think markets and investors are missing the main point. The main economic point in the U.S. and globally is COVID ebbing, and the synchronized global reopening that we've tried to do as a global economy twice and was stopped first by Delta, then by Omicron. We're now finally reopening the global economy, and investors are not paying any attention whatsoever. And I think this will dwarf the effect of a Russia-Ukraine conflict on the U.S. economy. I also think it will dwarf the effect of the Russia-Ukraine conflict on the European economy. And so to me, we're setting up for lower than expected inflation as Omicron ebbs, economies reopen, supply chains ease, people go back to work, and better than expected growth because the service sector in the economies globally is going to start to take off. And I can certainly tell you that's what's happening in the United States. If you look at restaurants, bookings, if you look at airline bookings, the numbers are very, very clear. And yet, if you look at the stock prices, those stocks for the reopening trades are going down. And so I think I think there's actually a significant opportunity opening up in the markets.
This is really important because, as you said, Jay, as we start to reopen the economies, we suddenly suffer this war between Russia and Ukraine. And Powell left a few messages in Congress. One of them is the confirmation of the rate hike in the March meeting in 2 weeks of 25 basis points. Powell does not rule out a more aggressive rate hike in the coming meetings if inflation persists. Do you think the Fed is right about this 25 basis points rate hike despite the war?
Well, it's quite interesting you asked, Marta, because one of the things that I wrote about in my monthly on Friday was the fact that while the Russia-Ukraine conflict is a horrible conflict, an unprovoked invasion of a sovereign country, and should not be allowed to stand. On the other hand, from a market perspective, it's actually done, it's actually done investors a favor because it's taken out the likelihood of the Fed acting very aggressively. And I'll give you two examples. There was an option that the Fed would raise 50 basis points in March. That is completely off the table in terms of market pricing. The markets pre the Russia invasion had priced in 7 rate hikes this year in the United States. That is now down to 5 rate hikes. And so if the worry of investors is that the Fed is going to tighten until things break, namely the equity market breaking, and that's the bear case in a nutshell, that risk has been taken off the table. And so to me, the fact that Omicron is ebbing, the Fed acting overly aggressively is no longer viable in this current environment. Those are two major positives for investors. And yet markets are risk assets, equities are selling off. And so I think we're setting up here for a very significant buying opportunity.
And Jay, in this context, what can investors do? Which investment opportunities do you see right now?
Well, I think it's again, very interesting. We've been very focused on the value side within the U.S., so financials, energy, et cetera. Obviously, the energy and the commodity things have done very, very well, though I would note that the energy equities have way underperformed the oil price over the last month. Oil companies in the U.S. up 6%, oil or the broad commodity index up 17%. But really where I think the opportunities lie are twofold. First, in Asia, one thing to note is China, which is a market we like a lot, has outperformed the U.S. and Europe significantly over the past month, basically flat over the past month, while the U.S. is down 5 and Europe is down 10. Secondly, I think the opportunity is in Europe. I believe Europe is going to emerge much, much stronger from this current conflict. I believe similar to the way COVID eliminated the fears about joint fiscal spending in Europe, Russia's invasion is going to end concerns about defense spending, strategic autonomy, energy security, etc. So to me, European banks off 15% in a matter of 2 weeks is an excellent buying opportunity. And broad European equities as well, I think, can be bought here. Europe, while growth may be down a little bit because of this conflict over the course of 2022, and while inflation may be slightly higher, it's not going to reverse the growth. Europe is probably going to grow 3% this year. Earnings are going to be fine. And so I think the opportunities lie in European equities, particularly banks, Asia equities, particularly China, And I think there's opportunities within the disruptive tech space in the United States.
We are taking note China outperforming the US and Europe much stronger from this conflict. Jay Pelosky from TPW Advisory, thank you so much.
Thank you, Marta.
Nos quedamos con